G'day and welcome back to the Money Talks program here at 2RRR 88.5 FM. Just pushed the wrong button there, but I did find it fairly quickly. I was talking today in the studio with Dr. Mark Dussault, an exponential growth strategist, and I didn't laugh, about alternative investments. We come from not different sides of the fence, but probably from slightly opposing points of view on how alternative investments can be used.
We actually agree on the principles. We just come at it from a different perspective.
Yeah,
it's kind of like we both speak English, but I have a Canadian accent and you have an Australian accent.
Yeah, can't help bad luck, really, can you? I don't know who that's applicable to, but anyway. And today, so we've been talking about how alternative investments, whilst can over fairly long periods of time, and we're talking long time horizons for an investment.
We're talking 20 years.
Can set up capital growth which can be turned into cash at some point in time in the future to put food on the table, hence as a passive income source.
Correct. We're not advocating that, just like small cap stocks that could be very speculative and very risky. We're not advocating you start buying pink diamonds for your wife or girlfriend just because you've heard this podcast or this radio show. What we're advocating is if you get involved in something and you become knowledgeable about it, you'll be able to judge what that value is.
Turn it to your advantage.
And turn it to your advantage. So in other words, turn a hobby into a wealth creation device.
Yep.
And when you can do that, there's nothing better that you can do. And again, if you do it with a small portion of your investment, then you're not taking the risks that punters would take where they're literally throwing the dice every single time. Because that's just gambling and that's just stupid.
And this is what this show is all about, giving people the information, education and the encouragement to get involved with their financial future. So
one of the statistics we were talking about during the break is that people just don't save enough. And one statistic is that the average person saves $300 a year after tax. I think that's still a little bit low, or that's it's somehow distorted. But I mean, it's not in the thousands of dollars. You could make one or two purchases of something that you enjoy, and you'd be doubling or tripling the amount of savings that you'd actually be accumulating.
And doing a little bit on a regular basis.
Correct. Yeah, even if it's one purchase a year,
yep.
or one purchase or two purchases a year, one maybe at Christmas time and one, let's say, at a birthday or at an anniversary, and you just say, okay, twice a year we're going to make a purchase. It'll be $1,000 or $5,000, whatever your budget might be, even if it's $100. But at least if it's something that's strategic and it's targeted, and when we're talking about a time horizon, we're talking 10, 20 years here, not 2 to 3 years. What'll happen is, as you start tracking it, you'll get pleasantly surprised that it actually is an investment. And you'll realize that some of what you're investing in is better than others. And again, with more limited supply, you're going to get a better return.
See, I like collecting wine, but I like drinking it more.
Yeah, collecting wine is another alternative investment. It can be very, very profitable.
Yeah.
The issue there is the cost of actually storing it. If you don't store it properly, without getting into the specifics of doing that, I know some people who've been quite successful that they basically have wine, they drink wine for free. So they'll buy and sell in bulk enough that all of their purchases are free. So their investments basically are self-funded. And their pleasure of drinking wine is fully funded as well.
But here again, it comes down to knowing exactly what you're buying.
Correct.
And being very aware of the market for wine, because in certain areas there is a wine glut, and
correct,
winemakers are having trouble giving it away.
But what's great about that is, like for example, when Monica and I moved to Australia, we started looking at the different wine regions. So we started researching them, tasting the reds and the whites, and being just amazed at how much better they were than what we had thought they were from Canada, because the Canadian import of Australian wines was quite limited 10 years ago. So all of a sudden we became connoisseurs of Australian wine. And guess what? It's kind of a fun thing to do. Now, we don't invest in wines because we don't have the space to actually warehouse wine. But you can quickly understand that the more you know about it, the better the decisions that you can make. So then all of a sudden you look at weather patterns, you look at the flooding, for example, you look at the temperatures, whether they're going up or down, how much rain is actually coming throughout the season, how much stress the grapes are under, and that's the temperature variations during the season and across season. And all of a sudden, guess what? That's a pretty interesting conversation to have over a glass of wine.
Yeah, it's a conversation I don't mind having at all, but
exactly.
I don't profess to being overly interested or having a huge amount of expertise, which is
Sure, but there are
which is
people.
what you do need if you're going to take wine investing seriously.
Yes, but if you're enjoying it, the point I'm making is, if you're enjoying it, you don't have the burden of, I gotta go pick up a book now and I gotta read about wine. It's just like if you enjoy something, you actually want to do it out of your own free will because it's something that's interesting to you.
Yep.
Because you understand that there's different kinds of grapes and there's different kinds of blends and there's different kinds of vineyards and there's the single vineyard wine versus the blends that come from multiple vineyards, and then there's blends of multiple types of grapes. All of a sudden you start, if you're interested, you start getting addicted to the fact that, wow, if I can actually take this and turn this into a revenue stream or wealth creation, I can, whether it's wine or anything else. But the fact that people enjoy it is one of those things that some people think that just because they enjoy it, they can't make money out of it.
Yeah.
Go tell that to a professional tennis player.
That's right.
They're having fun playing a sport that, in most cases, they really enjoy playing, or golfers, it's the same thing. And what I'm advocating, and this is where the exponential growth strategist moniker comes in, that if you can actually have fun doing things, you can actually get extraordinary results, for the simple reason that you're not smarter than the next person. It's just your enjoyment of it basically means that time flies. Therefore, you become more knowledgeable, and because you're more knowledgeable, you can outperform.
Yeah.
And you're outperforming your competitors. You know the story, right? There's two guys in the forest and they see a bear. And one guy says to this, "Oh my God, there's a bear." He goes, "We have to outrun the bear." He goes, "No, mate, I just have to outrun you."
Yes.
So if you can just outrun basically the competitor,
Yep.
which then becomes the traditional investments, well, guess what? If the property market's making 7 to 10 or 12%, and the stock market's the same thing, and you're getting 15 or 18%, and you're having fun doing it, perfect, tick the box.
Yeah. And this is where I would come back and say, look, you do need to speak to a financial professional
Yes.
to help you structure what it is you're going to spend on these sorts of
Absolutely.
alternative investments.
Yeah.
It's
Yeah,
not
you don't go out there buying jewelry for your wife or girlfriend or anything else for that matter just because you're having fun doing it. No, what we're saying is within a carefully structured approach, you say, okay, I have a budget of 10%, and I would even say you start off with 5%. And now with 5%, what could I do? What can I do to my self-managed super fund? What can I do, as a private investor? And then you start considering the alternatives. And before you invest, you have to consider the alternatives. And the alternatives are all the things that we talked about: collectibles, comic books, gold bullion, silver, diamonds, pink diamonds, yellow diamonds, you name it. And once you've considered those, then what you have to do is you have to start looking at what interests you and what you're actually good at. And paper trading, same thing. You look at a few things that you think will appreciate in value, talk to a few experts, and then you'll see if this is for you or if it's not.
And this is where I keep coming back to anything that people can get involved in and get excited about in as far as advancing their financial future, given how low the savings rate is currently, is going to be a hugely wonderful thing.
What a lot of people don't realize is they have these hidden assets that are sitting there, in their garage, or in the bottom of a drawer,
Or even between their ears.
yeah, or between their ears. And I had somebody who actually listened to something I was talking about, and he said, "You know what? I'm going to go in my garage and I'm going to see what I have." You know what he pulled out? $6,000 of NRL cards.
Okay.
So National Rugby League cards.
That he had from when he was a kid.
Yeah, from when he had a kid. I believe it was in 1980s or something.
Yeah.
He pulled out $6,000.
Yep.
He literally took out the box. He went to see an appraiser.
Yep.
Went to get a second opinion, and by the time he went to the third one, he realized the price is within a couple $100, and he walked away within, I think it was 10 or 14 days, or 2 or 3 weekends, and he turned that box of cards into $6,000.
I hope he put it into his superannuation for his future.
I don't know what he did with it because that wasn't part of the conversation, but the thing is, if it's sitting in your garage,
Yep.
that's $6,000. Now, some people say, well, yeah, if you held it for another 20 years, it'd be worth $20,000. Look, I totally get that, but what we're advocating is to actually start. So if you have kids and they're collecting things that you think are collectible, put them aside. Once they stop playing with it, instead of just literally trashing them, put them aside in the box, put it up in the attic, put it in the top shelf. And it's funny you think about that, but I just went back to Canada after a couple of years, and my parents obviously have the same garage that they had when I left, and there are some boxes in there that haven't been touched in 10 years, and you know what? Some of those things are collectibles. They're kids' toys that today the kid's toy itself might have been purchased for $5 or $6 that today are worth $200 or $300, simply because they don't make toys like that anymore. And the ones that they make now are different than the ones they used to make. The metal cars, for example,
That's right.
model cars. Now, even though they're damaged, actually gives them more of a collectible look and feel, even though something that's pristine will always outperform something that's damaged. But nonetheless, it just gives you an idea that, you know, if you haven't talked to your parents in a while, when you're there over the holidays at Christmas, you know what you want to do? Hey, Mom, Dad, let's go down to the garage, see what's in here.
Yeah, I know my parents are still at me to clean out some of my crap that I left there 30 years ago.
Yeah, now, here's a quick point. You're not going to make that $6,000, by the way, if you put it out on the curb and you sell it at the garage sale. The garage sale, people come by, they'll pick it up because they're interested, and some people, by the way, are investors who actually know that you don't know what the value is, and they're not going to give you $6,000 for those cards. They're going to give you $30 or $300, and you're going to be happy getting the $300. They walk away knowing that they've got a couple $1,000s.
You've actually got to do the legwork yourself.
Yeah, you've got to do the legwork, and it's not everything that you have in what is it, the show when they look at the traveling.
Antique Roadshow.
Yeah, the Antique Roadshow.
Oh yeah.
Right, the Antique Roadshow. Not everything is worth something. So I'm not advocating that everything that you have that's old is going to be worth something. What I'm advocating is pick something that you're interested in. In my case, I had hockey cards when I was a kid, so I know the old hockey players, and I know what's worth something and what isn't. You know, the rare player who died young or whatever it was, or you know had a scandal later on in life. Those things will stick out and will be disproportionately more valuable than someone who's a nondescript player.
Sure.
But if you have that interest, now all of a sudden you're redirecting that passion towards something that's called wealth creation. And when we were talking at the beginning of the top of the show, is that most people don't take an active approach. They take a reactive approach, and they take it when it's way too late.
That's right.
And what you want to do to create what your financial freedom day is, you want to start thinking about it as soon as you can, and do as little as you can, but you do it consistently for as long as possible.
So you've actually got to enjoy the travel, and you've got to get the results and see the results along the way to keep you motivated.
Yeah.
All of that good stuff.
Some people are obviously listening to this and would like to know a little bit more. We have a website where all of these recordings are on, so all the podcasts of the previous shows, it's on nextbeststep.com. So David and I upload them the day after the recording, after the actual live recording. So you can download those off the internet.